Good morning, good morning, good morning, good morning, guys. My name is Sean Dexter, and I welcome you back to the Mango Grove for your daily Bitcoin USD analysis video. It's a beautiful, beautiful day outside. By the way, check out my good morning, good morning, good morning t-shirt that Krisha got me. I'm loving it. I'm loving the day. I'm loving the way the year has started with Bitcoin pretty much sitting at $30,000. In fact, Bitcoin is making a move right now as we speak. We'll be talking about that very, very soon. But before we do that, all right, I do want to give a few shout outs to the entire freaking community. Not just you guys at Mango, but damn, the trading community, right? I've been thinking about it for a while, and I didn't want to talk about it because I felt a little bit guilty, but I'm just gonna come out and say it, especially since I was gone for a month, right? And I talked to a lot of people while I was on vacation, while I was on the beach, and a lot of people had a really, really hard time, and it dawned upon me even more so how lucky we were as traders, right? Because we weren't as dependent on the system as everyone else, and that's one of the reasons why we picked this career. But not only were we not dependent on the system, it kind of feels guilty to say it, but the market volatility really benefited us, right? We were able to take advantage of the volatility towards the downside, towards the upside, and more importantly, the entire lockdown scenario did not affect us as much because, hey, as traders, we pretty much locked down ourselves every single day of our lives. And yes, I get it, the pressure of the lockdown still affected us, but when the lockdowns were lifted, we were able to simply say, hey, you know what, I'm just gonna go ahead and take an entire month off and head off to the beach, which is what I did, right? I didn't have to email my boss and ask for permission, blah 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 blah, because I was talking to a few people on the beach, and they told me that some of their friends couldn't make it even though they really wanted to, because during the lockdown so many people were forced to take time off, right, that their bosses really struggled to actually give them time off when they wanted the time off. So yeah, shout out to all you traders out there, and shout out now to the Mango community for doing it the Mango way this entire freaking year. I do want to give two special mentions. One to someone I'm going to go ahead and name, and the other person I'm going to remain anonymous. I'm going to keep him anonymous for security reasons. So the first guy is VK. That's the wrong button, Sean. I think it's this button right over here. Okay, yeah, VK, right over here. Now, this guy's been in the Mango Seed community for almost a year now. He's been very, very quiet, but you guys may have seen him every now and then. As he even says in the screenshot right over here, hey, Sean, long time, wish you a very, very happy new year. I just wanted to tell you that joining the Seed way back in Feb was a great thing this year for me. I'm not very vocal in Discord, but I do follow the conversations and ideas that are posted. My total portfolio has 3x'd this year just by trading part-time the Mango way. In most cases, it was basic support and resistance trades, and of course, the Vine Pine combo. I can't wait to kill 2021 with you and the group, LFG, looking for group and rocket sign. So the reason I wanted to I got, by the way, I'm not trying to not shine light on the rest of you guys who PM me, right? I got tremendously some really good PMs from a lot of you, but this one I really wanted to point out because I think this was a pain point for many of you, right? Who, one, work full time, and two, tend to overcomplicate your trading. Look at what he said there, guys. He said that he was able to 3x his portfolio doing it the Mango way. And what's the Mango way, guys? Keeping it as simple as possible, keeping it as stress-free as possible. When I spoke to him, and I tell a lot of you Seed members, and you guys on the daily videos too, that you can do really well, keeping it really simple and trading only support and resistance, and that's what he did. He kept it as simple as basic support and resistance, and I've told you guys, all you need to do sometimes is rewatch those modules. Rewatch them over and over again. Watching them once and speeding through all the modules, right? All the modules in the program won't do you as much benefit as perfecting one of those modules. Yes, watch all the modules, but please come back to like a certain trading style that you enjoy. If support and resistance is your thing, perfect it. If trend trading is your thing, go ahead and perfect the advanced trend analysis module. Now, that module, to me, that is my that's my heart and soul, right? I love trend trading, but it fits my personality. And look what he mentioned over there, guys. Of course, using the Vine Pine combo. Now, I want to mention this too, right? I am the creator of the mango vine, but there's so many people who use it far more aggressively than me. Why? Because it fits their personality even more than my personality. And the vine is a very versatile indicator. Asset. I guess it is an asset, right? But for example, the way Rob trades it and the way Krisha trades it, it fits their personality to allow them to use it a lot more aggressively. Krisha, literally, all she did was vine. She blindly traded the vine. Okay, throughout the Christmas vacations too, she was just taking trades based on the wine blindly, and fits her personality because she's a lot more systematic than me, and I'm a more of a combination of a systematic and a discretionary trader because that fits my personality. So trade your personality, and the entire program is there for you to discover your trading personality and your edge, because there's so many things that you need to put together. It's not that you need to perfect only one thing and use only that. Yes, use your support and resistance along with your trend analysis, and whatever, place a weight on whatever you prefer on your personality, right? It's not that I don't use the vine and pan. I use it a lot, but not as aggressively as some people. Man, that went off on a massive tangent, but that's why some of you guys watch these videos to begin with. And if you're not here to watch my rambling, then why the hell are you even subscribed to Mango? Unsubscribe, hit the dislike, get the hell out of here. Let me go ahead and hide this. What else was I supposed to talk about? Oh yeah, the second shout out, and I'm not going to spend too much time on this, but the second shout out goes to another seed member who joined in the beginning of this year, and he joined on a down foot, okay, on a back foot rather, where he was around 27% down on a massive portfolio size. He was trading on a big number, 7 figures. So when you're down, to some of you guys, I think, 27% down, no big deal, right? But he was down on a 7-figure sum, right? And that can get a little bit overwhelming. And one of the first things he asked me when he joined was, Sean, how do I get out of this hole? What can I do to get out of this hole very, very quickly? And my response to him was, I'm going to have to slap that question out of you before we even begin. And the reason I said that to him, guys, is because as soon as you get into that mindset that you want to quickly make back your losses, you are setting yourself up for failure, because you take unnecessary risks and you're trying to chase something that may not even be there, and then you lose even more. He was already down around 30% on a 7-figure portfolio, right? So, and those of you who are on the C program, you guys know this, right? We spent the first two modules talking about this. The more you lose, the further your drawdown, the more you need to make it back up. So if you're 30% down, you actually need around 45% to just recover. Okay, you need a 40% win to recover. And that difference between how much you're drawn down and how much you need to recover gets drastic. When you're 90% down, by the way, guys, you don't need a 90% to recover. You need a 900% to recover. Just think about that. When you are down 90%, you need a 900% to recover. So your drawdowns are compounding in terms of your recovery rate needed. So when you are thinking in your mind that, hey, I need to recover really, really quickly, you end up drawing down even more, and it makes the recovery even harder. With that in mind, I had to say, I'm going to have to slap that question out of you, man. And we had a talk about it, and I told him, all you need to focus on is doing it right, and doing it right consistently. Don't think about what you've lost. Just think about what you need to do in front of you, right? Your journey ahead of you, and do it consistently. And I can't promise you anything, but I can promise you that in the long term, from where you are right now, you will be successful. Because I don't know what the market is going to be giving us moving forward. All I know is that if we follow our risk management principles, right, to the T, and our simple trading strategies, we will, 1, keep our losses low when they do come, and 2, when the wins come, we have the opportunity to turn them into monsters. For example, this Bitcoin trade, man, it's Jesus Christ, man. With that, let's go ahead and get started with the analysis. I do apologize for taking so much time to talk about all of this, but I think it is important, especially going into this brand new year. And hey, Bitcoin actually making the move I was looking for right now. So let's go ahead and get started. We're looking at the 4-hour time frame. So this is what I wanted to do today. I wanted to just touch on the 4-hour in the beginning of the video and then move on to the higher time frames, mainly the weekly and the 4-day time frame, to tell you guys how I am trading it, right? Because we are pretty much in a blue sky breakout now, and it gets a little bit more difficult to trade the higher time frames until we get that massive volatile move to the downside, where we come and test the higher time frame trend levels and the support and resistance levels, which we've not done just yet. So what we've been doing, okay, what Bitcoin has been doing is it has been trending on the lower time frames, and this was expected. If you guys do remember, if you guys have been paying attention to the videos leading up to this breakout, right? As soon as we broke 10,650, actually, okay, we won't get to that just yet, but essentially we had talked about how if Bitcoin breaks certain levels, okay, and we were looking at 10,650 on the monthly level to hold before it breaks certain levels towards the upside. But as soon as it closed at monthly level about 10,650, we said that, hey, we are likely going to make our way to 30,000 if we clear those levels above 20,000. And that's exactly what we've done, right? The markets tend to drift to these key levels that are very, very obvious to the major market participants. Now, here's the thing though that I've been hearing a lot, and I've disagreed with it. $30,000 being massive resistance where Bitcoin is going to see a rejection. You cannot think like that, okay? Especially as a trend trader, and two, even if you're not a trend trader, when you are on a blue sky breakout, you just keep assuming that the trend will keep following the direction, right? If you're a support and resistance trader, you don't know where resistance really is. It's not been really tested. You can come up with these psychological round numbers as your first point of resistance, but then what you need to do after that is watch the charts and be like, all right, what are we doing? Are we consolidating, or does it look like we're trending? And all Bitcoin has been doing, okay, ever since we broke 20K, is trending. So in today's video, I'm going to be telling you guys how I am looking at the high time frames and trading the lower time frames, because that's all you can really do on this kind of aggressive trend, to my advantage to keep on enjoying this market. And as you guys can see, Bitcoin did it take this high out over here? Yep, it did. And a nice candle close to come in 1 hour and 31 minutes if we see the follow through. So let's go ahead and get started. As usual, we're going to start with the Mango research dashboard. And we've been looking at the 4-day time frame, the Mango time frame, and as you can see, we are up 150% now since the last trend call long, which was 72 days ago. Guys, that was more than 2 months ago. 2 months and 12 days where you had to simply sit and do nothing. And that's the epitome of stress-free trading, right? Do nothing. Just let the trend take you to profits. And damn, 150% up now. Ethereum 82% up since the last call, which was almost 2 months ago. So hey, Krisha will be doing a ETH video, I do believe, so stay tuned for that one. Go ahead and check it out. Maybe she got it out already, maybe it's on the channel link down below. But yeah, so this is what I've been doing, guys. I've been looking at the 4-day time frame, okay, using the dashboard to filter out my trades. Of course, I've been primarily looking at Bitcoin for the longest time now. I'm going to switch on over to the 4-day time frame on the charts now. I do believe I have it over here. Is it? Yeah. So this is the weekly. We'll come back to the weekly. I do want to talk about the 4-day because we just looked at it on the dashboard. And essentially, I've been following it. So the dashboard, by the way, guys, is based off the Mango dynamic indicator, right? That's the backbone of the dashboard, which is why it has been a lot more powerful. So you guys are getting the same calls that I am seeing on the actual Mango dynamic. All you guys don't see are these levels over here, right? The actual line where the Mango dynamic is, but you guys do get to see it on the daily videos. And the big call that we were extremely bullish on was waiting for this candle close right over here at around 11,000, 10,950-ish to be a little bit more accurate. We were waiting for the 4-day to retake this level, right? That was the major one for us. As you can see, it was purple over here, which means consolidation. When it turns green, that lines up with, hey, consolidation breaking into a trend, and doing that on the 4-day gives the opportunity for big wins. But this wasn't the only thing we were looking at, right? I'm not going to go through all of it, but we were looking at multiple things. The monthly, the daily Ichimoku, also giving us the perfect Ichimoku trend signal. This is actually also covered in the Ichimoku module, right? While I was doing the module, all of this was happening. I was like, guys, the Ichimoku setup that we look for is giving us the perfect setup. And it was around the same time, or actually at the same time, that the 4-day time frame also was giving us the big call as well. So everything lined up for this massive win, by the way, this massive win. And now, by the way, Ethereum is doing something very similar, which is why we've been building that Ethereum trade since around 289 and on the way up. So we'll talk about Ethereum some other day. Bitcoin now. How do you trade this? Well, each time it comes down to the Mango dynamic levels, it is a massive buy opportunity. But the problem is that we are in a blue sky breakout, and when an asset breaks into a blue sky breakout, it is less likely that it comes down to test those major higher time frame levels. Keyword, less likely, not impossible. Okay, not impossible, just less probable than otherwise. So for example, when we were still living underneath 19,200, right, that was the level we were looking at, around 19,200, 19,300, we could have still been looking at that key 17,200 level that I was harping on over and over again, right? Remember the levels that we were looking for: 17,200 4-day level, 16,200 weekly level, and then underneath that, if we lose those two levels. And again, if you guys watch the video that I posted from the beach, right, I came on that Monday morning and told you guys, something special happened with Bitcoin. It recovered that weekly candle, not just above that 16,200 level, but also above 17,200, also above 18,200 and 19,200. That was a statement made by Bitcoin. And if you go ahead and look at the weekly, I believe it's right over here. Yep, this is the weekly right over here, right? This was the candle I did my video on from the beach, right over here. Let me zoom in. When we had this candle, things changed, guys. That's when you had to get massively bullish. If this, then that. Don't get stuck in your ways. Don't get emotional about wanting to buy at a certain level, okay? You need to have a plan for, hey, if Bitcoin or if any asset doesn't actually come down to the level I want it to come down, but it does something else and breaks major levels, am I going to get into position, or am I just going to let it run, right? I came on that morning and told you guys, Bitcoin just got really interesting, and this is what I was talking about. A weekly candle close above 19,200-ish, and ever since then, boom, hitting our 30,000 target. Not just yet, okay, but hey, 29,750 at the moment, that's as good as 30,000, guys. But going back to what we were talking about, I'm losing my train of thought. We were looking at this chart, I do believe, right? So we were talking about the problem, right? We were talking about how do we trade this? How do we build a position? I'll tell you guys what I have been doing, okay? And this is a very simple strategy. And I've been following a simple strategy for this because I was on the beach and I wanted to build an aggressive position above that 20,000 level. I wasn't going to miss out on this massive break. So what I did was I said, hey, as long as... Okay, so where did I get the 19,200 level from, by the way, guys? Just these candle closes, just to keep you guys, for those of you who are new and who haven't been following the channel, right over here. Okay, just zoom out, look at your 2017 4-day candle close highs right over here, coming in around 19,100-ish, if you want to be a little bit more accurate. That's where we got our levels from, and we were looking for that 4-day candle close above it. Soon as we got that, you're looking at the 4-day, you're looking at the 4-day dynamic, and I was saying, hey, now, for those of you who don't have access to the dynamic, you guys don't need to use it. But again, you guys can just look at the daily videos, and this 4-day only updates every 4 days, right? So you can just look at the level. Currently, the level's coming in at around 23,600-ish. Okay, so that's the 4-day dynamic level. So the way I was looking at it is, as long as the 4-day dynamic is staying green, and we are above it, right? As long as we're above it and we're staying green, I'm going to build my position based on the 4-hour dynamic, which I'm going to switch on right over here. So I've been essentially buying my position around the 4-hour dynamic. Remember, the 4-hour dynamic may still lose its trend by all means. Okay, it may lose its trend because my trade is based on the higher time frames. I've been building it based on the higher time frame, but I'm using the 4-hour dynamic as my guide to build this trade, because we are in an aggressive blue sky breakout. Because again, what I've been talking to you guys about, when you're trending, right? Let's say the 4-day trend is something like this, okay? And then you have an impulsive move. When you get an impulsive move above a major level, you guys need to understand that this impulsive move is likely going to have a trending move on the lower time frames. So if you zoom in onto the 4-day candle or the weekly candle or the monthly candle, it's going to have a trending move within its impulse on the lower time frames. So that's what you want to look for, and that's what you want to try to trade on something as massive as Bitcoin breaking 20,000. So Bitcoin breaking 20,000 is a massive event, right? And it's likely going to trade and have a volatile move, and that volatile move could be to either side. It could be to the upside or to the downside. For example, it could have been a massive fake out, a massive bull trap, and Bitcoin could have just dumped right back down below 19,000, right? Now, that's not what we were betting on. We had everything planned already. We said if this happens or that happens, blah blah blah, that's how we're going to trade it. And it was as simple as that, guys. The 4-day closed above that major 19,200 level, and that's when we started getting aggressive. But you have to look at the holistic picture. The holistic picture this time was as simple as blue sky breakout above the 20,000 level that people, the world, thought was a bubble level that Bitcoin will never get to, right? So you need to understand or put into consideration that a lot of people now were disproven. A lot of people would likely have even tried for short trades over there. A lot of people would have likely been trying to cover their short positions. And remember what we talk about, guys. For those of you who are still trying to understand or wrap your head around what exactly a short is. A short position is you essentially going on over to a exchange and borrowing Bitcoin or Ethereum or whatever asset you're shorting and selling it to the market. So you're going to the exchange and saying, hey man, I don't have Bitcoin to sell, but I want to short this asset because I think this is a high and I want to take advantage of the downside move, which is fine. Okay, that's fine. That actually adds market balance and market health. So you doing that is you borrowing it from the exchange at $20,000 price point and selling it to the exchange, selling it to the market at that $20,000 price point. So now you owe the exchange one Bitcoin, for example, and you have $20,000 in cash as hand. If I don't know why I'm going into this explanation, but why the hell not? If Bitcoin actually dumps back down to $15,000, you still owe the exchange that one Bitcoin, right? But you have $20,000 in your hand. So you can go ahead, buy your Bitcoin back or buy the Bitcoin back for 15,000, keep 5,000 to yourself and give the Bitcoin back to the exchange because you owe the exchange the Bitcoin. But what if Bitcoin doesn't dump to 15,000? What if it does the opposite? What if it actually goes up to 22,000, 23,000, 24,000? You're thinking to yourself, damn, I still owe the exchange that one Bitcoin. I am now going to have to buy that one Bitcoin back from the market at a higher price, but you have only $20,000 in your hand. So you're going to have to front another $2,000 or $5,000 of your own money to buy that Bitcoin so that you can return it to the exchange, right? So that applies a lot. One, it applies a lot of pressure to the short sellers. Two, they turn into buyers, right? People who were selling and applying pressure 20,000 are now turning into buyers at the $22,000, $25,000 mark, and that adds even more volatility towards the upside, which is why we were looking for that quick move to $30,000, at least to around $27,000 to $30,000. That impulsive move, which just made so much sense. But now here's the thing, guys. Here's the thing. The question is, does Bitcoin continue from here or does it see $30,000 as resistance? And I am against the idea of having a strong opinion over here. All you need to do, all we should do at Mango is if this then that, right? As things stand, I'm leaning towards 30,000 breaking because we haven't even broken the freaking short-term uptrend. We haven't even done that. Even if we lose a short-term uptrend, we still have the mid-term time frames to contend with. And until we even go into midterm time frame downtrend, it is stupid to be talking about a big pullback. All right, you go with the flow, guys. You go where the breeze takes you. And right now the breeze is taking us, it looks like the breeze wants to take us past $30,000. We are looking good, guys, looking good. So let's go ahead and talk about this right here. What are we looking for the next 4-hour candle close, and then we can talk about the 12-hour, and then we can talk about the daily. If the next 4-hour candle closes, the best candle close we could get is above here, okay, above 29,692, because that's where we put in the last 4-hour high, and that will be also far above the last 4-hour candle close at about 29,000. 463. Now here's the thing, just because we got the candle close that we're looking for, it doesn't mean that we will necessarily see the impulsive move immediately. If you look at the signature that Bitcoin has been putting in over the past like week or so, it's been trending in a methodical fashion on the lower time frames, right? On the 4-hour time frame specifically. So let's go ahead and look at this area right over here. You guys can see the horizontals that I've been trading. Essentially, this horizontal right over here at around 27,653. When Bitcoin broke that, right, that was a really, really easy trade. But look at how it wasn't impulsive, not immediately, okay? Not immediately. It gave us the candle close, right? Gave us the candle close right over here, okay? And this candle close level, by the way, is coming from these guys. We also had marked, or rather I had marked, this high right over here. What does Bitcoin do? It immediately goes and the next 4-hour candle takes out this high right over here. So now we have both. We have the candle close above, we have a high above the candle close high, and we've taken out the actual wick high too. And immediately after doing that, it gives us a beautiful buy opportunity on the Mango Dynamic, as well as, if you were not looking at the Mango Dynamic, you have this horizontal level right over here, right, at around 27,694. So it gave us both opportunities and then had its next leg towards the upside. Again, can we look for something similar? Because Bitcoin has been doing that even over here, right? Let me just go ahead and remove these drawings over here. We closed above this level over here, okay, which came out of this high, right? What do? Break up, make a new high of these guys, and come back and test the Mango Dynamic levels along with the horizontal level too. And now do we do something similar? Do we actually get this candle close high, have a mini move, and then come back, test the zone over here, perhaps give us a test on the Mango Dynamic too, and then keep going, right? This is how you build a position over time with the blue sky breakout. Guys, I'm doing exactly what we did during that run from around 4K all the way to 14K. We had the pullback and we tried for the continuation run. Unfortunately, Bitcoin stopped at around 12,000-ish and had a leg down after that, right? Or a trend towards the downside. So we don't know when this is going to stop. And we don't know when this is going to turn. That's what we specialize at Mango, right? That we don't know what's happening. We are going to make money anyways. We are going to make money the stress-free way. We are going to do it the Mango way. All right, so now let's go ahead and take a quick look at the 12-hour time frame, where I'll mark out a few key levels that you guys might be interested in, and then we'll wrap up the video by looking at the CMEs, where I do want to address something important, right? At least important to you guys at the Mango community, considering the way we like to trade. So the 12-hour time frame key levels, okay, so there is one level over here that does line up with the 4-hour level right over here at around 27,671. The bulls are going to want to hold that, but even if we do lose that, which by the way will line up with us losing the Mango Dynamic on the 12-hour time frame, there's way too much room on the higher time frames, like I said, on the 4-day time frame, on the daily, etc., for the bulls to let price the bulls can let price pull back to those levels, and they can still keep the higher time frame trend, which is, by the way, where this asset is trending on primarily, right? That's the trend that you are most concerned with, the weekly, the 4-day, etc. Hey, even the monthly, right? We'll talk about that in a video later this week. Next key level, if we do lose this level over here, is of course going to be this low over here at around 25,793. But I'll be looking towards this level. Okay, this is the level I'll be looking towards, 23,872, which I do believe lines up with the 4-day dynamic level. Yes, it does. Yes, it does. So that's going to be a key level for me. This 12-hour level right over here, right, at 23,882, lining up with the 4-day dynamic. So that's going to be a key level. If we lose this, guys, that's going to be an opportunity for us. Until then, though, I'm trading this very simply. I'm trading this the Mango way, the stress-free way. As things go up, they will continue to go up. As things go down, they will continue to go down. At the moment, Bitcoin is going up on every single time frame, right? The 4-hour, the 12-hour, the daily, the 4-day, the weekly, the monthly. And you guys know, if you guys are in the C program too, you guys know how to trade multi-time frame trend analysis. So key level over here on the 12-hour time frame, 23,872. If we lose that, next level coming all the way down to 19,800-ish. So this is going to line up with the 4-day breakout, which is around 19,200. So we may see a wick. Let's go ahead and mark that out as a zone. 19,000, was it 19,200? Somewhere around there, right? I'm just going to mark that out here temporarily, because we may see, if we do see a massive drawdown all the way to 20,000, we may wick down to around 19,000-ish, right? Low 19,000. So that's again, we are talking about these levels, guys, because there's nothing to talk about towards the upside. Towards the upside, I'm just taking it step by step. If we break 30K, the next level to look at is 35K and then 40K, right? You just look at these round numbers. That's what people are doing, and they're calling themselves brilliant. On that note, actually, let's go ahead and talk about CMEs, because there's been some brilliant stupid analysis coming up recently, and everybody's been talking about these gap fills, and you guys know my thought, my opinion on these gaps, right? There's a way to trade them. Most people are trading them wrong, and when you don't fully understand them, it's just best not to look at them. So the recent narrative is this, that Bitcoin has been moving on the weekends, and right now, right, Bitcoin is moving, right? It's 29,788. And because everyone's been talking about how institutions have been buying, and this entire move has been running only because of institutions, it means that these moves on the weekends are either fake, or retail is the one that's finally coming in and entering the market. Jesus, like, wow, the kind of stuff that people just assume because they read a couple of sentences on Reddit or Twitter, and they're suddenly geniuses on what's going on in the market. The inner plumbing of the markets is mind-blowing. Like, it's mind-blowing how people can be so confident, because the more I learn, guys, the more I learn about everything, the more I realize I know nothing, okay? So what I want to caution all the Mango viewers over here is, be very careful listening to anything now moving forward in regards to institutions are doing this, institutions are doing that, institutions are not buying on the weekend. How do you know? How do you know? Yes, institutional exchanges, like things like CMEs and all, they don't open on the weekends, but how do you know that an institutional investor who wants to hold Bitcoin as a hedge against the entire economy is not interested in actually buying spot Bitcoin? Maybe maybe a guy like Michael Saylor wants actual spot Bitcoin, which, by the way, he does, and he has spot Bitcoin, so he doesn't need to actually go through any doesn't absolutely need to go through any of these major exchanges that trade only on the weekdays. He could very well be going to an OTC desk that trades even on the weekend, and then that OTC desk will have to balance out their positions based on how much Michael Saylor has bought from them. They'll be balancing it out on exchanges that trade on the weekends, right? They might be going to freaking Coinbase or Binance for all we know. We don't know the inner plumbings. So if I want to go to an OTC desk and I buy a shit ton of Bitcoin, and then they realize that, damn, we need to now balance our books, they have to go and balance their books on the actual exchanges that trade on the weekend, right? So these moves may have indirectly been caused by institutions anyways, or they might be being caused by retailers. Is it relevant? Is it worth trying to overanalyze yourself out of a great position and out of a great trend? No, the trend is your friend. Do the Mango way, do the stress way, don't care about these stupid things. What's the gap coming in at anyways? 24,000. Well, guess what? It's going to line up with that level I just marked out over here, right over here at around 23,800-ish. Remember, CMEs do have a premium on them, but the point I'm trying to make over here is that you don't need any of that overcomplication. You can just focus on your pure technical analysis, and things are going to line up anyways, and you can keep your lives Mango. So with that being said, I'm going to wrap up the video right over here. This video has been one of the longer ones, but hey, it's been a while since I've done a video, and I had a lot to say, you know, a lot of rambling that needed to come out today. I hope you guys enjoy this one. Throw it a like, throw it a subscribe. Let me know in the comments below if you guys want more rambles, or do you guys just want me to draw support and resistance lines and say, hey, price is going to go here, price is going to go there, blah 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 blah. Let me know.